But let's get back to oil. All eyes are on OPEC's next meeting, which is set for tomorrow. We're joined now by Jason Schenker, president at Prestige Economics. Jason, thanks very much indeed for joining us.
Great to be here, Andy.
How do we think about oil here? It has been going up, but we do hear that plenty of Russian crude is still making its way onto world markets.
Well, I think the biggest thing to consider is that if we look, the demand for oil was really depressed during COVID. It's coming back now. Driving season is ahead in North America. We're going to see a lot of summer demand for crude, and yet inventories are down a lot and production's down still on a global basis. So with production down, inventory down, you've got supply tight, demand rising, and now you add the Russia concerns to that, and really it's a perfect storm of bullish factors.
Perfect storm. How high do you see oil going, Jason? Do you think it'll get back to its March highs, for example, WTI?
Yeah, we could be in the 120, 125 range for periods of time. But as we look at the quarter ahead, that summer driving season only lasts so long. And of course, the contracts that you trade are, month and a half out in advance. So if we look at where we're going to be in terms of crude demand, crude pricing, we could see those higher prices this summer, but we might see prices, we do expect they'll likely fall once the driving season's over for a couple of reasons. One being that these higher interest rates might dampen growth. The other being that we are seeing month after month, OPEC is gradually ramping up its production, but some demand destruction later in the year, we could see some of that as well.
I'm getting conflicting signals on U.S. gasoline consumption. You had at the holiday there Monday, the EEI inventories report delayed till tomorrow. Initially, I thought there were signs of U.S. drivers consuming less gasoline, but it looks like gasoline consumption is now holding up despite these record prices.
Well, that's right. A lot of it is, Andy, that people promised their family as soon as some of the COVID restrictions were over, they'd travel again, right? And you can see it with flights and flight costs, jet fuel demand, right? So people are back out there traveling again. And I think at this point, some folks haven't traveled in a year or two, and they're really going to be out there this summer in full force.
So, Jason, you think oil could be WTI could be 120, 125 for much of the summer?
I don't think for much of the summer. I think we could see prices spike into that area for periods of time. I think we're probably going to see we look at our official price decks for the third quarter for WTI is 118. So, I mean, that does put us in that range for, part of it, but, probably between the 115 and 125 for parts of the summer into September. That is very conceivable just based on the fact demand is up, supply is tight. And if we compare oil to the industrial metals prices, the interesting factor here is that those metals prices, they shot up when oil prices were still depressed. And so oil prices never really had those new sort of record highs that some of those metals had. But there are risks that we're going to see prices go up from here and quite a bit more potentially at times.
What about backwardation? Is that still a feature of the oil market? That, of course, is where near-term futures are trading at a premium, often means, a tight market.
Well, we do expect there's going to be backwardation through the curve, that we're going to see that continue to be the case, especially as we see the risk of a business investment recession in the U.S. increasing with those higher interest rates. That could fall off quite sharply, where we end up seeing a steep backwardation at times. That's something to probably watch for into Q3 and especially in Q4.
What is your feeling? It's very hard. There's so many strands here, but the Wall Street Journal, I'm not sure if you saw that story this morning, indicating that there are surreptitious meetings of ships on the ocean. Oil is being transferred as Russia finds a way to get plenty of oil onto world markets. Is a lot of Russian crude really being blocked here?
Well, we're talking about secret meetings.
Yes.
I'm not privy to these sorts of, are they relabeling or refunneling what goes to what ship? But I will say in these in global commodity markets, there are often long histories of finding ways to move around different embargoes and things like this. But there's often, these things often do get found out, and there's often costs and fines and other things that come along with that. So, on an individual level, I wouldn't advise folks to try to circumvent global policies like that. Mm-hmm. What I will say is that oil does tend to find a home, right? This is a globally fungible commodity. And so some economies might see that Russian oil trading at a discount, and so they'll buy that. And so other supplies move around to other places, seeking out the highest value. One of the biggest ways traders make money in all of commodities is arbitrage trading. It's either geography, quality, or time. That's how most trading money is made in the oil world.